Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, 2nd day of May, 2017, and this is the Daily Report for Gold and Silver. Muted and cautious trading today in the precious metals markets, actually in the markets overall, as the current FOMC meeting got underway today. Of course, we're really waiting for statements that will be made immediately following tomorrow's conclusion of the meeting. So up until then, I would look for muted moves in the market as market participants really await some clarity in terms of the Fed's current stance and how and when they will implement their next rate hike. Gold did close higher on the day, up about $2.20, $2.10, as you can see reflected in most current futures, trading at $1257.70. Now, the interesting thing is a very, very muted range. High on the day, $58.80, and the low, $52.60. That low is important. We will certainly discuss that as we pull up our first chart and look for any technical confirmation that gold pricing has found some sort of support in the market. Over to spot gold, a $12.56 and change, putting it up nominally under $1. And in terms of the highs and the lows, roughly the same area. Now, silver, which had really seen some dramatic selling pressure, some increased selling pressure, closed in essence unchanged. It is trading at 1684.5. The low today 1680 and the high 1701. So it still has a defined and narrow range, but in essence we saw silver close unchanged on the day. Spot silver at 1681.7. There is no doubt that market participants are awaiting some sort of clarity to come out of the Fed as they conclude their current FOMC meeting tomorrow in the afternoon. After that, they do issue some statements. We don't get the minutes till later on, but we should get a clear indication as to what their current thinking is in terms of when the next rate hike might occur, and also the liquidation of government assets, commonly known as a stealth rate hike. And the reason it's called a stealth rate hike is by actually liquidating some of the assets such as bonds. By selling bonds, you put pressure on bonds. Bond prices go lower. That means interest rates go higher. So it has the same net effect as ratcheting up interest rates, but there's a key difference. And the key difference is there's an unknown factor in terms of how much they liquidate and how that affects real interest rates. And until we're able to quantify that and put it into some sort of formula to gauge that, it contains uncertainty that up until now hasn't existed in the market. The Fed has really worked hard to create transparency, to let us know well ahead of time when they plan to raise or ratchet up interest rates. And we've had an idea of how accommodating they would be. And they've been under the basic guidelines that any interest rate hikes would be gradual, they would be slow, they would be planned out ahead of time so that the net effect in terms of any ripples in the economy would be minimized. And the same cannot be said for asset liquidation. So that's a wild card. We will just have to see how it plays out. And for that reason, it doesn't surprise me that gold pricing has firmed a little bit. As I said, trading at $57.70, up about $2. And there's a couple of key elements on a technical basis that are certainly alluding to a distinct possibility that we are finding some sort of bottom activity. The first thing is our basic fib retracement, and the fib retracement that I've put in basically covers this last rally from 1194 up to 1297, and then the subsequent areas, a 23% retracement, a 38% retracement, and I also believe I have a 50% retracement in there, but it is the 38% retracement that we certainly want to focus upon. Let's go ahead and blow this up. When we do that, we can see that falls pretty much precisely at the point in which gold is trading at. Now, we have a green candle. It's a slight uptick. It's in a harami position, meaning that it is absolutely in the position of being an inside trading cycle or trading day in this case, in that the open and close fall within the real body of the prior candle. However, the size of this particular candle, it is so much of a doji that we could put it into a star or pivot point kind of a characteristics and maybe label it a variation off a Three River Morning Star. However, I'm much more likely, of course, to really label this as a Harami cross, which would be the proper category for it. And then, of course, to take that, we would have to see tomorrow's market activity have a dramatically higher close, not just a small higher close, but a fairly dramatically higher close. That would, of course, make it a green candle. And when we got that, you can see where it would look very similar to a Three River Morning Star. It does meet the criteria, but in essence, in terms of the actual labeling of it, it is a Harami cross, and this would be a Harami cross confirmation. Of course, that would trigger a buy signal. If you recall from yesterday's show, I talked about the fact that when we look at silver, silver has been under dramatic selling pressure much greater than gold. We talked about the fact that when we looked at the 50 and 200-day moving average, I apologize, I don't have that up, but silver broke through those marks, whereas gold kind of used that as a key support level. What we can say about silver is I do believe that the selling has been extreme. We might, in fact, be in an oversold scenario. If in fact we're in an oversold scenario at a very, very interesting Fibonacci point, which is a 61% retracement, and it's a retracement from the entire length of the lows this year to the almost the highs this year, because we're pegging it at 1850, not this most recent high. And when we do that, the low that we get is 1678, markets at 1684. The low today, 1680. So we can see that it's come very, very close to the bottom of this. Now, much like the pattern that we just saw in gold, which was a Harami cross, we are certainly getting a bullish Harami cross potential in this one. Although typically you'll get the candle body in the center of the prior candle, and that's where the word or pattern description of Harami comes from. From my understanding, it means pregnant in Japanese, and that describes the way these two candles look together. But again, it is a variation off the various pivot points that we look for that would indicate a key reversal. If we do issue a buy signal in gold, it is highly likely we will do the same in silver if both of those markets trigger that, and we are certainly seeing the setup for that. And lastly, I did want to take a quick look at the gold-silver ratio. Now, I've got this set at a half a day. Let me go ahead and change that to reflect a daily chart or daily movement. And when we do that, we can see that this market, in terms of the ratio, has been widening, and it's been widening throughout the last, call it 3 weeks, as it was just above 68 ounces per 1 ounce of gold. That's the ratio, to now where it's traded up to over 74 ounces of silver to buy each ounce of gold. Now, interestingly enough, we see that today we've got this extended tail. We also have a very, very small bodied candle, and that would be, in terms of a straight candlestick identification, that would be a hangman. Hangman, if it's found after a defined uptrend. This same candle is labeled as a hammer if it's found after a defined downtrend. And also, candle color is irrelevant when we're looking at umbrella lines, which is the hammer, the inverted hammer, the shooting star, and of course, hangman. So therefore, I would look for this particular ratio to begin to contract a little bit if in fact we see both gold and silver take off aggressively to the upside later on this week. And the reason for that is when you get these spurts or upside moves in gold and silver, typically silver has performed in terms of a percentage gain much greater than gold. In other markets that we follow, U.S. equities also muted on the day as reflected in the Dow Jones Industrial Average, 20,949 and change, putting it up about 0.2%, net gain of about 36 points. S&P also tracking higher on the day, up a little bit over 0.1% at 2391. However, it's the NASDAQ that continues to gain attention, even though it closed at 60.95 and the net change was only 3.77 points. Every higher tick in this market puts it in the territory of new record closes. So we're certainly still in that area, but in terms of an intra-day high, that high has been breached today when the market went to 61.02. I believe 6100 was the intraday high yesterday. Now, crude oil definitely saw some dramatic downside pressure, a continuation of the drop, now below $48 a barrel, 47.59. It lost about 2.5% today when it traded roughly $1.25 lower per barrel. Definitely back to a level of critical support. A break below this could, on a technical basis, send crude oil to about $44 a barrel. We are certainly seeing not only a glut of crude oil on the market, but a reflection in price because of that. No doubt a tremendous downside drop in crude oil. Literally falling out of bed, losing about 2% on the day. It is kind of squaring up now and trimming some of the earlier morning's drawdowns. As you can see, this tail continues to grow. Crude oil is now only down 1.9%, a little bit under 2%, 47.90, trading off by about 93 cents right now. However, I think that on a technical basis, the damage has been done. We've got our two moving averages here. This upper one, of course, is our shorter term 50-day moving average, and this red one here is our longer 200-day moving average. And it is that 200-day moving average that the majority of technical traders use to determine whether, in terms of chart analysis on a long-term basis, if the market's in a bull or bear scenario. The break below that certainly is a bearish scenario, and the fact of the matter is that although over the last couple of days the market closed right at that particular price point, it still had the opportunity. It was so close we could have seen support in some sort of a technical bounce. However, today's market move below the 200-day moving average, as far as I'm concerned, really signals the potential for much further decline in terms of pricing. Now, easy to see at $47, we have some really strong support by virtue of after it hit 54 and traded sideways for a while. When it came down from 54, this is the price point that it found support at. Now, today's low was around 47.35, so very close to that. And at that point, as you can see, by virtue of this longer tail, buying came into the market and pushed it up off of those lows. But that's only this one day. If we have further decline and we challenge this particular price point at 47, we could see oil go much lower. The next target I would have would be $43 a barrel, and it is simply based upon price projections of historical points in which the market either found support or resistance, a top or a bottom. Below that, of course, is this bottom that was achieved in August of last year, and that's a very recent low, below 40 at $39. Now, I'm not looking at $39 right now, but if 47 cannot hold, my sense is we could see oil drift lower as much as another $4 per barrel. So traders, my recommendation is to remain flat with no active trades or positions. However, we have seen the first very promising signs that we have found support both in gold and silver. However, we still need confirming candles, that pivot point, to demonstrate to us that we have in fact seen a bottom and will move to higher ground. Of course, if that occurs, we will send out a special trade alert via email as well as SMX, a text notification to your phone. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.